Hi there. My name is Russ Horn, and I'd just like to take a couple of short minutes and talk to you a little bit about what is currently going on in the Forex or the currency markets. We've had some issues in 2008, and it started kind of a whole chain of events. And right now, if you're a brand new currency trader, you might be finding it difficult to be profitable in this certain environment. Now, if you've been around for a little while, you might also find that lately it has been difficult. The market seems to be unusually choppy. The moves aren't like they used to be, and this is not specific to you. You might have been thinking that you're the only one, that you can't seem to quite get the hang of it, or the profits that you do make end up leaving. You make a little bit and then it goes away again. Now, this is not just you. This is most traders right now. Most traders today are having the exact same problems you are. And it's not just the little guy either. Hedge funds and some of the big financial institutions are also having troubles. Every once in a while, you see a chart of a hedge fund's performance, and it's just up and down, probably just like your account. You make a little bit, you lose a little bit, and you end up kind of break even, or even worse, you end up losing a little bit. So it's not just you as a new trader or as a intermediate trader that hasn't quite got the hang of it yet. It is clear across the entire market. So don't worry, it's not just you. There are some reasons for what's been happening, and we have some basic solutions too. So the fall of the financial institutions. Now, this essentially occurred in 2008. It was the beginning. 2008 started the snowball effect, as it were. Now, it didn't just affect small banks and small traders, it affected all kinds of big things as well. And the housing market was a big example. That's one that most people are aware of. We had bubbles that burst. We've had just things on the decline ever since 2008. And that could also be reflected in whatever investments that you have. They're performing very poorly because of 2008's initial descent. Some of the economists out there are calling it depression. Definitely, they're calling it a recession. They say it is almost as bad as what they saw in the Great Depression of the 30s. Now, that might be pushing it, but just the fact that they bring that up means we are really in dire straits. There are situations out there that are affecting the currency markets, and because of it, it is making it very difficult for you and for me and for even the larger institutions to be profitable in their trading. The responsibility now falls to you, the individual trader. You know that Forex trading is a great way to earn an income. It's a great way to make money. Now, like I had said before, we're finding it difficult to do that. There are ways around this. Systems have been developed. Things have changed to accommodate the current alterations, as it were, in the market. But as it comes to you as a trader, you can no longer depend on investment firms. Any kinds of investments that used to be reliable aren't so reliable anymore. So it does fall to you to take control of your investments, to take control of your future, of your financial future. What has been happening lately, and I know you're aware of this, is the bigger investment companies, the banks, and so on, have made a shift. They're not looking after you the way they used to. They look at your money in a different way now. They look at your money as an opportunity for them to make more money. And the way things have gone as of late, what you've seen is they will take your money and they will risk it. Very high leverage, very risky investments that don't usually work out. But if they do work out, that's great. They make a whole bunch of money. If they don't work out, which seems to be more often than not right now, and this is with your money, that if the investment doesn't work out, then your money's gone. And they don't care. Why don't they care? They are getting bailed out by the government. Some of these investment firms are so big that if they fail, it would essentially collapse the economic structure that we have. So the banks are bailing them out. Now, with these bailouts, you don't get your money back. The investment bank, the investment firm, they get their money back, but it doesn't go back to you. If they've lost your money, then it's too bad. You've lost your money. They've lost it for you. And they will point to the little tiny writing, the disclaimer that, well, it was your fault for doing it. You knew the risks when you invested, and they took some huge risks, and it didn't work out. They got bailed out, and they paid themselves huge bonuses for doing it, but you don't get any of that back. So what used to be reliable isn't so reliable anymore. So what has to happen is that responsibility now really does fall to you. If you want to earn some money in the markets, in the currency market specifically, then you want to take control. You want to be the one pulling the trigger. You want to be the one that decides, this is when I get in, this is when I get out, this is the money that I'll be making, this is the risk that I'm going to take. All of that will be determined by you specifically. Now, how do we do something like that? Well, you're not going to find that kind of responsibility as far as it goes in a $99 system. Some guy hawking a little cheap trading system on the internet or wherever you may find it, $99 and you'll retire. I mean, that just isn't the case. I don't know that anybody that's done that before. $99, $97, whatever the dollar figure is these days, just is essentially being put out there by scammers. They want your money. They don't want to support you. They don't want to show you how the thing works. They take your money. They understand what the refund rate is, and they're happy with that. They can put out a product. It doesn't work. They don't care as long as they get that percentage. After the refunds, they've made so much money. They're happy. They don't care about what you do with it. On the other hand, paying $10,000 for a system, that's not going to do it either. Most traders just can't afford a $10,000 system. And they're not all great either. You might be spending a whole lot of money for not a whole lot more. So you want something that's in the middle. You want something that is reliable, has some support, has some backup, has somebody behind it, essentially. But that's essentially the road we want to go down, is you want to take responsibility for your actions, for your trades. You want to be the one that makes the trades, makes the call, pulls the trigger. You want to be the one that is in control. You don't want to let this control now go to a black box, as it were, or an institution that says, we're going to take your money and we're going to double it over so many weeks or months. When you don't know how the process works, chances are there is no process. So taking matters into your own hands, becoming responsible for yourself, is really the only way to go. This is the direction that most successful traders have taken. I don't know any successful traders that have used a robot and come out ahead, have used an investment firm and these days anyways come out ahead, given money to a black box of some kind. And a black box simply is you just don't know how the thing works, and they don't divulge that kind of information. And now if a trading system or an investment company does not want to tell you how they're making their returns, how they're making their money, then there's something fishy there, something you might want to stay away from. So if you're taking that responsibility on yourself, you know the ins and the outs, the reasons why you're trading, why you're getting in, why you're getting out. It does take a little bit of work, but it really is the only way to go. Now, Forex trading is a great opportunity. And with that, there comes some negativity. The opportunity is really good. You can make some very decent, some very sizable returns when you trade. And they can range depending on you, what your tolerances are, how frequently you can trade, and so on. But even if you trade quite moderately and very sparingly, you can still earn quite a bit more than you could anywhere else. Now, this leads to a group of opportunistic individuals. And you probably know some of them. These are the kinds of guys that want to take advantage of a good thing and really kind of put the screws to it, as it were. They want to take a Forex trading system or whatever the case is and try to make 100% in 2 weeks or a month even. They want to get rich really quick. They don't want to put any effort into it. They don't want to have huge returns, but work for it. They want it to be super easy, point and click kind of things. They want to be told how to do it, when to buy, when to sell. And that, again, starts to point us in the direction of the black box thing. They don't want to take the time to learn how the thing works, how to trade, what's correct, what's wrong, what's you should avoid, what you should do, how to properly manage a trade once you're in a trade, how to properly manage your money. These are all different aspects of taking responsibility. And the opportunistic individuals, they don't want any of that. And they ultimately will always fail. Because they're not putting in the time, they're not putting in the effort, they're not putting in what it takes to make trading work, to make it work for you. And it can really work. It does work. A realistic trader, which I know you are, will work for their money. I mean, there's a lot of money to be made. So putting in that effort is definitely well worth the price, well worth the effort. You want to learn how the system works. You want to learn the rules. You want to learn how to play the game so that you end up being profitable. You understand certain concepts, like there will be losers, you can't win every trade, and that you're not going to get a ton of pips or ticks or whatever you want to call it in a market move. Sometimes the market just doesn't have it to give, and the opportunistic trader is going to want to try to get as much of it as possible and then some, and they end up failing. Well, the realistic trader understands that there's only so much the market can do. Sometimes the market can do more, and a realistic trader is also aware of this, and they try to capture what they can, but they understand that if there isn't that much to give, they have exit strategies. They have ways to get out. They have ways to capture as much as they can from the market and not want to go after what's not there, essentially. The greed factor doesn't play such a big effect. Now, opportunistic is a big word because I think most traders are essentially opportunistic, and that's not such a bad thing. Now, when I say it in this context, we're looking at traders, even the good guys, the realistic traders. We're doing it to improve our lot in life, as it were, and that is a wonderful thing. That there's nothing wrong with wanting to do better for yourself and for your family. We understand that there are gains to be had, and we like to take advantage of that. But the realistic trader understands there's limits. There's limits to the market movements. There's limits to the trading system. There's limits to the trader themselves. But all of that gets put into a package, and all of that becomes workable and usable and understandable when the really out and left-wing opportunistic guys, they don't have any clue that this is what's required. And once they start realizing that this is what's required, they'll quit. They will look for another opportunity, another get-rich-quick scheme, as it were. So trading, the way we're talking about it, is for the realistic individual that wants to do better and can do better, but understands that there is an element of work that's involved. I touched on this a little earlier, scams. There's individuals out there that find marketing to be what they're good at. Forex traders, they're a fairly big group of people. Forex trading is complicated. Forex trading is scary. Forex trading can be overwhelming for the new trader. Once you get into it, once you start kind of getting your feet wet, it becomes a lot easier to understand and not scary anymore. You just basically deal with the rules, you deal with the emotions, you don't go for too much, and so on. Like you understand what I'm talking about. But again, there's individuals out there that would love to market you with a trading system that never loses, for example. A trading system that they're not going to show you the rules. They're just going to say, invest money in my firm, my account, and everything will be good for you. You'll get an X amount % return every day, every week, every month, every year, whatever the case is, and have no interest in telling you how it works, what's going on. The trouble is, it's getting difficult now to tell the scammers from the not the scammers, from the real guys. And essentially, the scammers have no interest in helping you be a better trader. And as for me, that is what I'm looking for. When you're looking for an individual or a system to buy, does that system help you as a trader be a better trader? Not hide stuff from you, not give you a system that you can't understand, not give you a robot that they're just not willing to show you how it works. Those really aren't out for your benefit. They're hiding something from you. And if they're hiding something from you, that's really a red flag. That's something that you want to kind of pay attention to. You want to see, is this something I want to go with? On the other hand, and they seem to be getting fewer and farther between, the traders that are out there that do want to help you, and they are out there. There's no question about that. There are the good guys out there. But they will show you everything you want to know. They will answer all your questions. How does this work? Why does this work? What are we doing? Why are we doing it? How are we doing it? What's the best way to do it? Can we change it? All of those questions. I mean, there is going to be nothing hidden. If you are trying to avoid the scammers, this really is what you want to look for. Somebody that's maybe been around for a little while. There are new traders that pop up that are the real deal. And I've worked with a few of them. But being a new trader, they don't have a track record in the public eye as much. And it makes it a little more difficult. But if you can get a hold of them, get some answers, they respond to their emails, they have a support team, a support staff, and they show their face. That's another one. If they're not willing to show their face, give you their name, this kind of thing, maybe there's something to stay away from. Maybe this is a scam. Because it is getting more and more difficult now to really tell them apart. They're getting good. And they're sort of poking at that area in you that wants to make money. You want to generate a better lifestyle. You want a better income. You want to treat yourself better. You want to treat your family better. And those are all the triggers that the scammers really drive home. They really want to tell you can have the life of your dreams in the next 4 months if you buy this. And if they go really hardcore on those kinds of elements, the really good feeling things, the things that you want to have. Do you want to be able to retire 6 months from now? You want to be able to tell your boss, see ya. You want to fire your boss, as it were. You want to quit your job. And they promise that you can do this in a very, very short time. And now with the markets, as they've changed a little bit, we have to change. Now, that is not a problem, but there are traders out there that are using old, outdated techniques, old, outdated systems, and they're trying to sell these to you. And they say they work really, really well and they work instantly and you can be making money in the next 20 minutes and you can retire at the end of the week. That's just not the case. As the markets have changed, as the trading environment has changed, as the volatility has changed, we see the markets acting very differently. They haven't acted this way years ago. They're acting in a new way. Now, if you talk to a trader that's been around for the last 10 years or so, they'll be able to tell you right up. They'll say the markets, they weren't like this 10 years ago. The markets were a lot more flowy. The markets had a better movement to them. They were more predictable. They were more easily tradable. They're not quite that way anymore. They're a little more difficult to trade. They're a little choppier. Even on the longer time frames. The higher time frame you go, the 4 hour, the daily, the weekly, the monthly, depending on your trading style, the higher you go, the smoother they get. But they're still a lot choppier than they used to be. So what we want to do is look for something newer, something that has adapted with the market, something that has made the changes necessary to make trading today possible, to make it today profitable. There are some certain key elements. We have support and resistance, trend lines, and so on. These are basic fundamentals of trading, and they are going to stay with us forever. They haven't changed. They still work. They can cut through some of the chop, but the more elaborate trading systems, when you start adding the different indicators and you start looking for turning points and you're looking for formations and things, some of that has changed. The market doesn't move the way the indicators were set up, the way they were built for the market conditions 10, 15 years ago, 5 years ago even. So what we need now is to adapt. We need to change. We need to mold our techniques, our methods to accommodate what is happening in the market today. Not 5 years ago, not 10 years ago, but what's going on over the last 6 months, what's going on over the last 2 weeks. And we really just want to adapt. We want to make the changes we have to make in order to keep being profitable. And this is why a lot of traders are having a hard time. They're using systems that were good systems and they worked in a certain market environment. And from time to time, you'll see that market environment show up. It'll be a little window within some of the chops to see it return to the way it was. But generally, the markets are moving in a new way. And if these traders, and this even goes to some of the hedge funds, they're using systems that are a little bit outdated and they're having a tough time keeping up these days. They're not reaching profit targets. They're getting stopped out maybe a little too quickly. They're not getting in on the correct breakout. You know, these kinds of things. It's just little things, but they make a big difference. So we need to change. We need to adapt. We need to accommodate some of these new changes. So what we're going to do is the very first thing that you want to do is go back to the basics. Kind of start over if you have to. Go back to what are the essentials in trading. Now, the market can only do 3 different things. It can go up, go down, go sideways. And it can't do anything else than that. And looking at it from an outside, from the outside perspective of what a new trader would look at it is well, it's going up, you buy. It's going down, you sell. How hard can that be? We really have found it to be a lot more difficult than it looks. You don't know how high it can go. You don't know how low it can drop. And that is where the secret is. Is it really going up? Is it really going down? Is it a correction in a bigger move? We don't know that. Once you get into it, you experience that kind of thing. And over the last few years, everything's changed. So what you used to know doesn't work so much anymore. What looks like the market could be going up isn't always the case. And we're going to make accommodations for that. So going back to the basics, looking at the very essentials, support resistance, looking at trend lines, looking at chart patterns. These are really how they did it back in the day. And traders made a lot of money with it. These still hold true today. If you reassociate yourselves with some of the old stuff, the patterns, the trend lines, support resistance levels, that's a good way to start. Capital preservation is so important. And I should have mentioned that a little bit earlier. Capital preservation as part of being a realistic trader. That is very important. You want to be here long enough to make your fortune, as it were. You want to be here long enough to make those returns that you're looking for. And risking 10%, 15%, 20% on a trade just isn't going to do it. You're going to have a string of losing trades. And at that kind of risk, you only need 3 or 4 or 10 at most. And you're gone. You're no longer in the game. You can't trade anymore. So we want to have proper money management. Risk small amounts per trade. So if you were to lose that trade, if the trade hit your initial stop, the most you could lose is X amount % of that account. For a new trader, I strongly suggest 1%. So every trade you take, the maximum you could lose is 1%. As a more accomplished trader, you could go up to 2, maybe 3 on the outside edge. 3% would be the maximum I would go. You don't want to risk much more than that because you are going to experience strings of losses. You're going to experience some drawdown. And the market conditions the way they are now, you're going to experience this a little more regularly than you used to. Even though you have a great trading system, it works really well, you're going to get those 2 and 3 and maybe even 4 losses in a row. And you want to be able to weather that storm. So that is so essential. I mean, that is the basics, is being responsible, being able to come back from any kind of hit that you might take, 2 losses in a row, 3 losses in a row, and not have it cripple your account. You don't want to have it so much so that it really is a big deal to rebuild those losses. You want to be able to quickly rebound from them. Emotional control. I mean, these are very important aspects. You want to be in control of yourself the whole time. You don't have to like the losses, but you don't want to let them get to you. You don't want to have them affect you emotionally in such a way that you're an emotional wreck when you're trading. You want to trade with a calmness. And that really comes with practice. You want to be practicing. You want to be trading, demo trading, live trading, whatever the case is. The wins are great. The losses, they're not so good, but they happen. And you have to take them all as a package. It's not one or nothing. It's all or nothing kind of thing. You can't just choose one over the other because it comes as a package if this is what you choose to do. If you want to be a Forex trader, this is how the package comes to you. We need a good system. We need to accept the losses, and we need to be in control of ourselves all the time. You don't want to be taking bad trades. There is a difference between taking bad trades and losing trades. Bad trade doesn't follow the trading system. A bad trade is a gut feeling. A bad trade is something that is outside of those established rules. And the worst thing that can happen is you could win that bad trade. That will inspire you to take more bad trades, and that will be very detrimental. In the end, that will kill your account. A losing trade can still be a great trade. All the signals were there. It was perfect. It was a nice setup. There was no reason not to take it, but it didn't work out. That is a good trade. Even though you lost, that is one of the basics. You take the trades, and don't let that loss keep you from taking the next trade. These are the kinds of things we have to get back to. Just the trading psychology, looking at the basics, getting yourself a decent trading system that works now, getting in touch or associating yourself with an individual that has been trading, somebody that's there that can help you, a group of people, a forum or something that can kind of help you through the rough spots. It's tough to trade alone. Trading is a very lonely business, and it's just getting tougher. So if you can associate yourself in some form or fashion with a like-minded individuals, then that will help as well. I'd like to touch on treating trading as a business, because it really is. It is a business. You are doing one thing in return for money. Now, whether it's printing t-shirts like I used to do, whether it is building a house, whether it's fixing a car, you are doing something in return for that money. And that becomes your income. That becomes the way you generate money. Now, it might not be the only income you have, or it might be the only income you have down the road. You might become a full-time trader, and it is paramount that you treat it as a business. It deserves the respect that a business would deserve. You go through your day with the same appreciation, with the same respectfulness that any other business is entitled to. If you don't treat it appropriately, it will find a way to make you pay for it. So trading as a business is very important. All the books, the record keeping, the documentation, the hours, it needs to be fine-tuned, it needs to be honed, and it needs to be treated as you would treat any business, any other business. Trading is one of those few businesses that, and it might be the only one, that can take you to that upper class without needing to grow the business, as it were. With any other business, if you want to get into the top 5%, your income has to be quite a bit more than maybe what it is now. And Forex trading can get you there without growing a shop, without acquiring more of this, without more overhead, without more departments, without more employees. You can do better year after year trading without needing to grow anything. You don't need a bigger office. You don't need a bigger anything. You just need your account to keep growing. And it really is the great equalizer. I mentioned this before. It can take you to a brand new level, a level you've never been before. So in that respect, it deserves what could be even more attention and more respect and more, it just needs to be treated more carefully, more cautiously, and it needs to be worked like you would work a business that has a huge potential, because this really does. This is going to possibly be what you do for a living. As a full-time trader, this becomes your only income. And it can be a great one if you treat it well and you kind of go by the numbers, as it were. If you were to take the trading, and like any other business, you've got a process. Trading is no different. You have a process and you have to pay attention to that process, or it won't work quite the way it's built to work. So as a quick recap, we want to take a look at the markets, how they've changed. And we want to be able to change with them, because they have changed. They have changed quite a bit since 2008. Everything started moving downhill 2008, and the markets have kind of gone with it. And traders, their profitability, some of them aren't profitable anymore that used to be. And others that are profitable aren't nearly as profitable as they used to be. But I think for the most part, traders are having a tough time. And it's not just the traders, it's the banks and the investment firms and hedge funds and these kinds of things. They're all feeling the effects of this chaotically volatile market. So we need to adapt. We need to take advantage of what the market is doing, and not just survive it, but take advantage of it. Do something different, change it so that we can actually make money from the way the market is acting now. Being responsible is a big deal. You have to be responsible. This is that point where you can no longer trust the financial entities. They're not really out there for you anymore. They're out there for themselves. The leverage is huge. The risk is insane. And if they lose your money, it's no big deal to them, because they're going to get bailed out. And they pretty much go into it knowing that. So they can risk your money. And if they win, that's great for them. You're not going to see much of it. If they lose, you're going to lose it. And they don't care. They really don't, because they're going to get a bailout. And that bailout doesn't go back to you. Whatever you lost is gone. And they will blame you for it because you should have known the risks. Now, the scams, you want to be aware of them. If they're not out there to help you become a better trader, best stay away from them. There's no face, if there's no system that they're willing to explain, stick with what you know. Stick with somebody you can get in contact with. Stick with somebody that's been around for a little while. These kinds of things are going to help you avoid the intentional scams that are out there. Again, responsibility is huge. You have to take responsibility for yourself because it really is how you're going to accomplish the things that you want. Anybody that's ever accomplished something great took all the responsibility. It was on their shoulders, and this really is the case. In order to succeed trading in the markets, you want to be that responsible individual that knows the ins and outs of everything that you're doing. I just want to say thank you for spending this time with me. I really did appreciate the fact that you were here with me this long. This has been a little while. It's gone longer than I planned on having it go. That seems to be the case when I get talking to you. But again, I really do appreciate that you spent the time with me and we covered some pretty important aspects. The market's changing and we need to change with it. So on that note, I'm going to wish you a good day. And thanks again for watching. And I will see you very soon. Bye-bye.